Right. Right. Now, question number three. Question number three. Solve proprietorship. Second tude. Second tude. Question number three. Right. Question number three. Question number one and two we have discussed. One and two we have done. Question number three. Debtors as at 1st January 2024 62,000. Credit sales 182,000. Cash received, impairment loss, discount allowed 2,000, sales return 8,000. Allowance for expected loss, policy of the business 5%. Okay, for the first question and second question, I gave you allowance for expected loss policy of the business for the first time. Okay, first time allowance for expected loss. First time allowance for expected loss. Okay, for the question number 1 and 2, first time. But third question, that is not the first time. Okay, in first question, allowance for expected loss policy of the business is not for the first time. Okay, their policy is to provide provision for doubtful debts at 5%. Okay, allowance for expected loss policy of the business is 5%. Their policy is 5%. Okay, then in this question, you need to calculate opening allowance for expected loss, opening balance. Okay, question number 1 and 2 discuss about the allowance for expected loss for the first time. But question number 3, their policy is to allowing allowance for expected loss as 5%. Their policy. Then you can calculate opening allowance for expected loss amount. Okay, using this 5% rate. Using this 5% rate. Right now, quickly we will discuss this question. Look at the question. Question number 3. Question number 3. Now I quickly create data account. Data account. Malidu, can you hear Malidu? Malidu, can you hear Malidu? Right. Right. And now I will prepare impairment loss account. Impairment loss account. And then my third one, allowance for expected loss account. Allowance for expected loss account. Right, please remove last fourth one. Please cut fourth one. Now, please remove fourth one. Fourth one, bad and doubtful loss account. Please remove this one. Please remove this one. Now, please remove. Right, now please remove fourth one. Now. Right. Question number 3. Question number 3. Abhishek, can you hear me, Abhishek? I think you can hear me, Abhishek. Right. Now I look at question number 3. Debtors as at 1st January 2024 is 62,000. Opening debtor balance. Opening debtor balance. Right. Now in the issue as opening debtor balance. Opening balance 62,000. Opening debtor balance 62,000. And then credit sales during the year. Sales account credit. Debtors account debit. Sales account credit. Debtors account debit. 182,000. 182,000. Credit sales. Okay, right. And then insurance third one. Cash received 142,000. Received in cash. What's the double entry? Cash book debit. Debtors account credit. Debtors account credit. Cash. Cash collected 142,000. Impairment loss 7,000. Impairment loss. Bad debts. Bad debts written off 7,000. How to record the 7,000? Debtors account credit 7,000. Impairment loss. Debtors account credit. Impairment loss account debit 7,000. Debtors. So debtors account credit. Impairment loss account debit. Debtors account credit. Impairment loss account debit 7,000. Discount allowed or discount allowed to debtors. What's the double entry? Discount allowed account debit, debtors account credit. Discount allowed account debit, debtors account credit. Okay, discount allowed expense. Discount allowed expense. Discount allowed 2,000. Discount allowed 2,000. Right. Next one. Sales return. What's the double entry? Sales return account debit, debtors account credit. You need to deduct 8,000 from debtors. Sales return 8,000. Sales return 8,000. Last one. Allowance for expected loss policy of the allowance for expected loss policy of the business is 5%. Students, then how much the opening allowance for expected loss? Opening balance how much? Using the opening data balance. Using the opening data balance, you can calculate opening allowance for expected loss. Here, policy of the business organization is to allowing 5% as allowance for expected loss. Then on this opening balance, there should be opening balance in the allowance for expected loss account as opening balance. On this opening data balance, there should be an opening balance in the allowance for expected loss account. This is on the second type. First type. Policy of the business is to allowing allowance for expected loss based on the data balance. Then if opening data balance 62,000, based on the opening data balance, you should be able to calculate the opening allowance for expected loss. The insurance here 62,000 into 5%. 62,000 into 5%. 62,000 into 5%. How much? 3,100. 3,100. The insurance opening allowance for expected loss balance should be 3,100. 3,100. Policy of the business is to allowing expected loss 5% on the data balance. Okay, then based on the opening data balance. Opening data balance means last month closing data balance. Last month or last year closing data balance. This year or this month opening data balance. Last month closing data, this month opening data. Okay, based on that, allowance for expected loss opening. Their policy is allowing expected loss 5% on data balance. Then insurance allowance for expected loss balance brought forward how much? 3,100. Balance brought forward amount 3,100. Balance brought forward 1 BBF amount. BBF amount. Okay, BBF amount 3,100. Then students, right now we can calculate closing allowance for expected loss. Closing balance. Right, am I? Before that, calculate the closing data balance. How much the closing data balance? How much the closing data balance? Here, 62,000 plus 182,000, 244,000, 244,000, and then students 244,000 minus 142, 7,000, 2,000, and 8,000. Closing data balance 85,000. Balance carried down 85,000. Balance brought forward 85,000. Then based on the closing data balance. Then based on the closing data balance. My closing data balance 85,000. Closing data balance how much? 85,000. Then 85,000 into 5%. 85,000 into 5% should be there in the allowance for expected loss account as closing balance. As closing balance. Now, In the allowance for expected loss, now 5% should be there based on the closing data balance. How much? 85,000 into 85,000 into 5%. 4,250. Yes. 4,250. Okay, now even 4,250. Then this should be the amount in the allowance for expected loss account as closing balance. Then closing balance how much? 4,250. Balance carried down 4,250. Balance brought forward 4,250. Based on the closing data balance, you should have 4,250 in the allowance for expected loss account. In the allowance for expected loss account. Right now you can balance. So you can balance the allowance for expected loss account. Now you can balance allowance for expected loss account. Right now, if you balance allowance for expected loss account, how much the difference? Higher side, debit side, then 4,250, 4,250, right? Then 4,250 minus 3,100, 4,250 minus 3,100, 1,150, 1,150 should be transferred where? Huh? 1,150 should be transferred where? Transfer to impairment loss account. Through the impairment loss account, you can transfer net expense to the profit and loss account. Profit and loss account. The insurance allowance for expected loss account credit, impairment loss account, debit. Allowance for expected loss account credit, impairment loss account debit 1,150. Allowance for expected loss. Allowance for expected loss. Right now, this balance should be transferred to profit and loss. 7,000 plus 1,150 means 8,100. 8,150. 8,150 transfer to profit and loss. This is the expense. This is the expense. Net expense of allowance for expected loss 8,150. Right. Sigma clear?
So allowance for expected loss can make provision of down to definite.
Oh, come in. I have last research.
Sir, may
Allowance provision for yes.
sir,
Oh,
sir, allowance for may provision of doubtful debts may arrive. May profit and loss के may SFP के may अगर दी कौन से pattern
SOFP the profit and loss.
may SFP
This SOFP then. When closing data balance 85,000 and current assets when debtors 85,000, debtors minus allowance for expected loss closing balance 4,250. Allowance for expected loss 4,250. 85,000 is a debit balance. 4,250 is a credit balance.
so there is
Okay,
a
then
bad debt sold down
balance. Huh?
bad debt sold may PNL
P&L total 1,850 and distribution expense.
okay
Total 8,150 transfer to distribution expense. Distribution expense. Okay, then.
okay sir.
Okay, clear, right? Malidu clear, Malidu. Abhishek, clear, Abhishek.
Yes, sir.
Yes. Now shall I go to fourth question? Now shall I go to fourth question?
Okay, sir.
Abhishek, shall I go to fourth question?
Yes, sir.
Right. Sitma, Malidu, fourth one. Okay, right. Now look at the fourth question. Right. Lama, in this fourth question, this 142,000, you need to for the 142,000, write down it as 200,000. So write it as 200,000. Nah, 200,000. Okay, right. And then please remove bad and doubtful letters. Please remove fourth one. No need to discuss fourth one. No need fourth one, nah? Okay then. Okay then. Right. Right. Now, quick, complete the question with me, yeah? Complete the question with me. Right. Quickly we discuss question number 4. Question number 4. Now, look at the question number 4. Debtors opening balance. Debtors as of 1st January 24. You need to calculate the debtor balance. You need to calculate the debtor balance. Credit sales you will get 200,000. Credit sales you will get how much? 200,000 credit sales. Cash received 192,000. Cash received. Impairment loss 5,000. Impairment loss 5,000. Discount allowed 3,000. Discount allowed 3,000. Sales return 4,000. Allowance for expected loss policy of the business is 5% on opening balance. 5% and opening balance is 1,600, right? Lamai then, based on the opening balance, you can calculate allowance for expected loss opening balance. You can calculate opening balance. Okay, opening balance you can calculate. Right. Right. Lamai opening balance you can calculate. Right. Lamai, quickly complete data account. Complete the data account. Prepare data account. Prepare data account, Lamai. And then impairment loss account. And then allowance for expected loss account. Allowance for expected loss account. Okay, then right. Don't use rulers. Use your same blue pen. Draw T accounts. Okay, don't spend time. If you know how to create debtors account, if you know how to prepare impairment loss account, if you know how to prepare allowance for expected loss account, don't waste time on it. Don't waste time. If you know something, don't waste time on it. On that. Complete. quickly draw T counts as soon as possible. Don't waste time on that. Okay. My advice is, if you know something, don't waste time on that. It is useless. You need to save time in your A-level exam. To save time, okay. To save time, if you know something, don't waste time on that. Okay, every minute is important in A-level examination. Therefore, don't use rulers. Don't use pencil. Okay, using your same blue pen. Quickly draw T accounts. Quickly draw record structures. Quickly draw company account structure. Okay, right. Now, that is one of the advice for A-level students to save your time. Okay, right. Right, now look at the question number 4. Look at the question number 4. Debtors account opening balance, you need to calculate. We'll calculate. All right. Credit sales, how much? 200,000. Credit sales. Am I? Complete the question with me. Credit sales. Debtors account debit, sales account credit 200,000. Debtors account debit, sales account credit sales. Debtors account debit. Cash received 192,000. Cash received 192,000. Students. Cash received, debtors account debit. Sorry, debtors account credit. Cash book debit, debtors account credit, cash. Impairment loss 5,000. Impairment loss 5,000. Impairment loss 5,000. Debtors account credit 5,000. Debtors account credit 5,000. Impairment loss. Impairment loss account debit 5,000. Debtors. Impairment loss 5,000. Discount allowed 3,000. Discount allowed 3,000. Discount allowed account debit. Debtors account credit. Debtors account credit 3,000. Discount allowed. Discount allowed. Sales return. Sales return account debit. Debtors account credit 4,000. Sales return. Right. Allowance for expected loss policy of the business is 5% on opening balance. Opening balance 5%. Right. Am I? Allowance for expected loss account opening balance. Opening balance 1,600. Opening balance 1,600. That is the 5% of opening data balance. That 1,600 is 5% from opening data balance. 5%. Then if 1,600 is a 5%, using that one you can calculate opening data balance. Now I 1,600 opening allowance for expected loss account is 5% from opening data balance. From opening data balance. Then 1,600 you can divide by 5 multiplied by 100 to calculate opening data balance. To calculate opening data balance. So how much opening data balance? 1,600 divided by 5 into 100. Open data balance. Yes, correct statement. Open data balance 32,000. Open data balance 32,000. Then open data balance 32,000. Opening balance 32,000. Right. Right. Now here you calculated open data balance. Right. Now you can calculate closing data balance. Based on the closing data balance, calculate closing allowance for expected loss. Debtors 32,000 plus 200,000, 232,000, 232,000. Then 232,000 minus Dakshani. We are discussing question number 4. Question number 4. For the question number 4, the credit sales you need to okay, for this credit sales write down 200,000. For this credit sales, write down 200,000. Okay, not 142,000. Write down it as 200,000 and then remove this one. Remove this one. Balance doubtfulness. Please remove this sentence. This requirement no need to do. Okay, Dakshani. Okay, right. Right then, Dakshani. Right, based on that, sales 200,000. Right. Now, how are the closing data balance? 232,000 minus 192,000, 5,000, 3,000 and 4,000. Closing data balance 28,000. Closing data balance 28,000. Balance carried down 28,000. Balance brought forward 28,000. BBF 28,000. BBF 28,000. Then why? Closing data balance 28,000. 28,000 into 5%. How much? 28,000 into 5%. 1,400. 1,400. Closing data balance 28,000. Closing data balance 28,000. And then based on closing data balance, allowance for expected loss closing balance 1,400. 1,400. Then 1,400 is a closing allowance for expected loss balance. Balance carried down 1,400. Balance brought forward 1,400. Closing allowance for expected loss amount. Closing allowance for expected loss account 1,400. Right. Right. Now the difference in the allowance for expected loss account should be transferred to profit and loss. Higher side, credit side. Higher side, credit side. Debit side 1,400. Then 1,600 transferred to debit side 1,600. 1,600 minus 200 means 200. 1,600 minus 1,400 means 200. 1,600 minus 1,400 means 200. Then 200 transferred to impairment loss account. 200 transferred to impairment loss account. Transferred to impairment loss account. Then allowance for expected loss account debit, impairment loss account credit. Impairment loss account credit. Allowance for expected loss. Okay, allowance for expected loss account debit, impairment loss account credit. Impairment loss account credit. Allowance for expected loss account debit, impairment loss account credit. Okay, then right. Now right. Impairment loss, the difference you can transfer to profit and loss. Difference. 5,000. 5,000. 5,000 minus 200. 5,000 minus 200. 4,800. 4,800 profit and loss. That 4,800 should be transferred profit and loss. 4,800 transferred profit and loss. Clear? Sitma, clear Sitma.
Clear, sir. Sir,
Yes.
may allowance for may are 200 thing impairment loss credit side de एक में मुकल से transaction है तो
इधर एक में allowance for expected loss account debit, impairment loss account credit में opening allowance for expected loss 1,600. Closing balance 1,400. Neither. When data balance decrease, may our opening data balance 32,000, closing data balance 28,000. Neither. Risk of the business decreased by 4,000. Risk of the business, neither. risk of debtors decreased by 4,000. Then if risk decrease, allowance for expected loss also you need to decrease.
So we can details la may අපි doubtful debt කියලා මේ කරපුවා details කියලා give again.
ඒකේ අර allowance for expected loss balance එක drop කරන්න ඕනේ. risk එක drop කරානේ. මේ debtor balance decreased by 4,000. Then future possible also decreased by 200. Future possible also decreased by 200. Risk decrease. If risk decrease, then possible loss also you need to decrease.
Second risk decrease කරනවා කියන්නේ අපි මේ doubtful debt එක කියලා අපි හිතන් හිටපුවා debtor කෙනෙක් ගෙවුවේ.
ඒ කියන්නේ doubtful debts කියලා අපි recognize කරපේවා ඒකේ allowance එක drop කරන්න ඕනේ. ඒ කියන්නේ ඉස්සර risk එක drop වෙනවා risk එක drop කරන හින්දා ඒ allowance එක drop කරන්න ඕනේ. අපි හිතනවා possible loss එක 1600 කියන්නේ නෑ. දැන් future possible loss එක එන්න පුළුවන් 1400 විතරයි. ඉතින් risk එක drop වෙනවා.
risk drop වෙනවා කියන්නේ මොකක්ද වෙන්නේ?
ඉතින්ද 32,000 නේද receivable නේ. debtors are receivable 32,000 receivable. The business organization doesn't know about whether they can recover this 32,000. Debtors were receivable to the business. Receivable. Make a risk of business. It is a risk. Sometimes we will be unable to recover this 32,000 from debtors in future. We will be unable to recover this 32,000 in future. Okay. Therefore, out of this 32,000, 5%, 1,600 we have charged for capital loss in previous year. Prudence concept. Based on the prudence concept, future possible losses. Out of this 32,000, we will be unable to recover 5% in future. Therefore, in previous year we have charged 1,600 for capital loss in previous year. But in this year, closing debtor balance decreased to 28,000. Then risk of debtors decreased by 4,000. අපිට මේ රිකවර් කරන්න බැරි වෙනවනේ ඉස්සරහ සිටම. බැරි එක ඒ risk එක drop වෙනවා 4,000 වල.
Okay sir, clear.
හරි නේද මේ? Then 4,000 into 5%. 4,000 into 5%. 4,500 200. Then that provision also you want to decrease by 200 provision. Okay, right there. Your risk decreased by 4,000. Based on that opening provision for doubtful debts, opening also expected loss was unit decreased by 200. Then how to decrease? How to decrease? From this 1,600, you need to decrease 200. Then allowance for expected loss account debit 200. Impairment loss account credit 200. Then the remaining balance is 1,600, 1,600, 1,600 minus 200, 1,400. Balance carried down, balance brought forward. Okay, Jitna.
Okay sir, clear.
Okay, right. Okay, when you're doing papers, other questions, okay, solve questions, you will be able to get the whole idea, okay, regarding allowance for expected loss, right? Dakshani, is it clear, Dakshani? Fourth one?
Yes, sir.
Malidu clear. Abhishek, fourth one clear. Abhishek clear. Abhishek, fourth one clear.
Yes,
Malidu
sir.
clear, eh? Right. Right. Right, can you complete question number 5, 6, and 7? Question 5, 6, and 7 and send me answers, huh? 5, 6, and 7. In question number 5, please remove fourth requirement. Fourth one, please remove. In question number 5, remove fourth requirement. In question number 6 also same. Remove fourth requirement. In question number 7 also remove fourth requirement. Huh? Remove fourth requirement. Balance double समय remove that. I now quickly complete question number 5, 6, 7. Quickly complete 5, 6, 7. For the question number 5, write down for the question 5, write down allowance for expected loss as 10%. For the question number 5, write down allowance for expected loss account 10%. There is no rate here. For the question 5, write down allowance for expected loss 10%. Right, now look at the question number 5. Debtors as at 1st January 2024. Question number 5, 8,000. Owing debtor balance 8,000. Opening credit sales 25,000. Received cash 18,000. Impairments 1,000. Debtor credit impairments account debit 1,000. Allowance for expected loss policy of the business 10%. This is not the first time, okay? Allowance for expected loss policy of the business 10%. Then now, based on the opening debtor balance, 800 into 10% means 800. Allowance for expected loss opening balance 800. Their policy is to providing allowance for expected loss 800. 10%. Debtors account debit. Then now, allowance for expected loss opening balance 800. Opening balance 800. Right. Then insurance closing debtor balance how much? Closing debtor balance 8,000 plus 25,000 minus 18,000 and 1,000, 14,000. Balance carried down 14,000, balance brought forward 14,000, then 40,000 into 10%, 1,400. Balance carried down 1,400. Here, balance carried down 1,400. 1,400. Closing balance should be there as 1,400. And then insurance, when you balance off, okay, this allowance for expected loss account 1,400, 1,400, 1,400 minus 800 means how much? 600. 600 impairment loss. 600 recognized as expense. Impairment loss. Then allowance for expected loss account credit, impairment loss account debit. Allowance for expected loss. Now this 1,000 they know. 1,000 they have removed as bad debts. Okay, but this 600, okay, sometimes we will be unable to recover in future. This 1,000 you know, this 1,000 bad debts. Because of death of one of the debtor, you can't recover this 1,000. You can't recover this 1,000. Okay, by the insurance then here 1,600 transfer to Proprietorship. Proprietorship 1,600. Clear? Is it clear? Dakshani clear? Manu clear?
Yes.
Okay, right. Now you need to join the class on time, that's the issue. If you can't understand, that's the issue. Okay, and then you to recover those points again you need to watch recording. Right, Lamai, question number 6. Look at the question 6. Quickly look at the question number 6. Data's account. Data's account. And then impairment loss account. And then allowance for asset loss. Right. Question number 6. Look at the question number 6. Opening data balance you need to calculate. Opening data balance you need to calculate. Right. We'll calculate opening balance. Right. Ramai, credit sales 136,000 sales. Debtors account debit. Sales account credit 136,000 sales. Cash received. Cash book debit. Debtors account credit 1,400. Cash received. Impairment loss 4,000. Impairment loss 4,000. Debtors account credit 4,000. Impairment loss account debit 4,000. Impairment loss account debit 4,000. Debtors. Then the bad debts. You know, you can't recover 4,000 from debtors. Okay, because of the bankruptcy of his business, now you can recover 4,000 from one of the debtor. Okay, okay, then that 4,000 you can directly remove from the debtors account. Debtors account credit, impairment account debit. You know the exact amount. But in allowance for expected loss, in provision for doubtful debts, you don't know the exact amount. Depending on the closing debtor balance, open debtor balance, you can decide what amount should be charged for profit and loss. But that is one of your assumption. Oh, okay. You need to guess. Okay, you need to predict future loss. You need to predict future loss. Okay, that predicted loss is the allowance for expected loss. Predicted loss. Right, 4,000 okay. Then discount allowed 2,000. Discount allowed account debit, debtors account credit 2,000. Debtors account credit 2,000. Discount allowed. Discount allowed. You can recover this 2,000. Sales return. Sales return account debit, debtors account credit 4,000. Sales return. And then allowance for expected loss, opening balance 4,800. Opening balance. Then insurance based on the opening balance, you can calculate now opening data balance. You can calculate now opening data balance. Right. Okay. 4,800 is a 5%. 5% from opening data balance. 5%. 4,800 5%. Then divide this amount by 5. Multiply by 100 to calculate total data balance. Okay. 4,800 is a 5% from opening data balance. 4,800 divided by 5 into 100. How much? 96,000. Opening data balance 96,000. Opening data balance 96,000. 96,000. Right now, balance the debtors account. 96,000 plus 136.
Sir,
232,000.
excuse me, sir.
Yes.
Sir, in the question number 6, it says loss expected loss policy of this business is 10%.
Oh, 10%, 10%. Sorry, 10%. Yes. Right. Then 4,800 divided by 10, then multiplied by 100. Right. 48,000, eh? Open balance?
Yes, sir.
Yes, 40,000. Open balance 40,000. Right. Come on. Open balance 48,000, nah? Right. Then 48,000 plus 136, 184. 184. 184 minus 144. 4,000, 8,000, 10,000. Then balance carried out 30,000, eh? Kitna? Closing data balance 30,000, eh? Closing data balance Right, right. Right. Based on the closing data balance, closing allowance for expected loss. 30,000 into 10%, 3,000. Now my closing balance should be 3,000. Closing balance should be 3,000. Closing data balance should be 3,000. When you balance this allowance for expected loss account, here high side credit side 4,800, 4,800, 4,800 minus 3,000, then how much? 1,800. 1,800. Allowance for expected loss account debit 1,800. Impairment loss account credit 1,800. Allowance for expected loss account debit, impairment loss account credit 1,800. Your risk decrease in this financial year. Your risk decrease. Opening balance was 48,000, but closing balance 30,000. Your data balance decreased by 18,000. Okay. Right. Right. Then now you can calculate closing balance that should be transferred to profit and loss. Profit and loss. I said 4,000. 4,000. 4,000 minus 1,800. How much? 2,200. Profit and loss. Okay then. 2,200 profit and loss. Clear? Okay then. Daksharan clear.
Okay.
Right. Abhishek, okay, Abhishek.
Okay, sir.
Right. Malidu, clear, Malidu. Okay, right. Now you can complete question 7. Okay, question 7 is one of these question. Huh? 7 you can done. You can do question 7. Right. Now right. Next week we start depreciation. Huh? If you have time today, we will discuss depreciation. Okay, right. Right. Now 7 you can do. 7 you can do. Right. Sitma, which question we discuss as a last solve proportion question. Last day we discuss, I think question number 37, 37 done, discuss. 37 done, Dakshari 37.
Yes, sir.
Yes, right, right. And do you have any homework? 38 homework or not? 38. Is it homework 38? Now question number 38 is a homework or not? 38, Sigma. Abhishek Manadu.
Sorry, sir.
38 homework there, 38. Alright. 38 homework, right, right. Dakshari, is it balanced Dakshari? 38. Abhishek, question number 38 balance or not? Abhishek, Manadu, balance?
No, sir.
No. Sitma is balance. 38 balance. Sitma not balance. Sitma balance 38. Sitma balance. Right. Right. Now we'll get 50 minutes break. Right. Now I quickly discuss question number 38, page number 17. Ne? Question number 38. Right.
So 38 done. 39.
38 done. Ne? Right. Need to discuss 9. Ne? Right. Right. The 37 we have discussed. Ne? 37. Sitma, we have discussed only 37. Ne?
Sorry, sir.
38.
So 37 we discussed in the class last week. 38 was homework.
Yes. 38 homework. Right. We discussed 38. Huh? Quickly list 38. Abhishek, did you try to complete question number 38?
Yes, sir, but not balanced.
Next, right. What about Malidu? Malidu, did you try to complete question number 38? Rakshami, did you try to complete question number 38?
Yes, sir, but not balanced.
Alright. 30 Rasika trading business. Rasika trading business. Rasika trading business, huh? Uh, 30 Rasika trading business. Financial ending date 16. 16, yes. Right, now question 38. Look at the question 38 question. Question 38. Rasika Trading is a sole proprietorship owned by Rasika. The trial balance of Rasika Trading business as of 31st March 2016 as follows. Right, you can see the trial balance of Rasika Trading organization. Trial balance. And here you can see additional information. These are the additional information given in the question. Additional information, right? We'll discuss 38. Right, right? Closing stock of the business 3,480 closing stock. Closing stock 3,480. Lamai was double entry for the closing stock. We discussed with the positive closing stock account debit, trading account credit, closing stock. Okay, with the tute 1 we discussed closing stock double entry, closing stock account debit, trading account credit. Okay, closing stock debit. Then that debit entry should be recorded in statement of financial position. Closing stock debit, then debit 3,450 in the statement of financial position 3,450. 3,450. Adela my trading account credit, then closing stock from profit you need to deduct. From the trading account you need to deduct closing stock 3,450. Clear? Manidu clear, Manidu. Abhishek clear?
Yeah.
Closing stock, okay, right. And then insurance, second one, a receivable from Ganga distribution amounted to 150 to be written off as bad debts and a general provision of 2% for doubtful debts to be made for the remaining trade receivable balance at the end. Okay, right, Lamai. Okay, right, Lamai. We can adjust this one like this. Now here, receivable from Ganga distributor 150. Right here, Lamai. Trade receivable how much? Opening trade receivable 6,500. Opening trade receivable 6,500. Here 6,500 trade receivable. Out of this 150 written off as bad debts. Impairment loss 150. Impairment loss 150. Trade receivable credit, impairment loss account debit 150. And then insurance. As an insurance, and to make a general provision of 2% for doubtful debts to be made on the remaining trade receivable balance. Am I? A provision for doubtful debts. Allowance for expected loss. Allowance for expected loss. Right. Allowance for expected loss. Opening balance how much? Opening balance 620. Allowance for doubtful debts. Opening balance 620 opening balance. 620 opening balance. And then insurance. Based on the remaining data balance, you need to make a provision of 2%. 2%. Remaining data balance how much? 6,500 minus 150. 6,350. 6,350 into 2%. 127. Closing balance 127. Closing balance. Lamai. Closing balance 127. Balance carried down 127. Balance brought forward 127. Balance carried down 127. Balance brought forward 127. Right now, the difference in expected loss account you can transfer to impairment loss. Lamai. Higher side, credit side. 620. Transfer debit side 620. 620 minus 127. 620 minus 127. The difference is how much? 493. What's the double end of the 493? Allowance for expected loss account debit 493. Impairment loss account credit. Impairment loss account credit 493. Allowance for expected loss. Allowance for expected loss account debit. Impairment loss account credit. Right now, the difference you can transfer to profit and loss. Okay, now the difference. Difference is higher side, credit side 493. 493 minus 150. 343. 493. 493 minus 150. 343. 343 profit and loss account. Now 343. 343. Yeah. This amount profit and loss account credit. 343 profit and loss credit. Impairment loss account debit. Profit and loss account credit. Profit and loss account credit. Credit means income. Profit and loss credit means income. But this 343 we deduct from distribution expense. This 343 you need to deduct from distribution expenses. 343. Okay, right then. Closing debt balance how much? 6,350 closing debt balance. Right, really good. Really good. Now, to the profit and loss, you need to check. Right, at first, trade receivable balance how much? 6,350. We record in the statement of financial position. Right, data closing balance 6,350. Data closing balance 6,350. Data closing balance. And then students, impairment loss 343 should be charged to distribution expenses. Okay. Right, Lamai, we record impairment loss. Okay, over provision of impairment loss. Actually, that amount is over provision of impairment loss. Over provision. Over provision of impairment loss. Now that amount over provision of impairment loss. Over provision of impairment loss. Over provision. That amount 343 minus 343. 343 minus 343. Minus 343. Minus 343. Right, done. Right, and then allowance for expected loss closing balance how much? 127. Allowance for expected loss closing balance 127. Okay, then right. Dakshana clear. Closing the
Yes,
balance
sir.
and clear, right? Malindu clear, Malindu. Okay, right. Right. Vihara missing, Vihara missing. Bhatia missing. Right, 343, right. Done, finish, right. Now I look at the third adjustment, third one, accumulated depreciation. The policy of the business is to provide depreciation on straight line basis on cost as follows, right? Right, at first we record cost. Land and building cost 25,500. 25,500 land and building cost. Motor vehicle cost 4,400. Motor vehicle cost 4,400. Office equipment 2,750. Office equipment. Office equipment 2,750. Office equipment. Okay, right. And then students, building depreciation 5%. Building Land and building, total amount 5,000, sorry, total amount 25,500. Out of 25,500, 5,000 land, 5,500 land. Building value is 20,000. Building value 20,000. 20,000 into 5%. 20,000 into 5%. 2,000, 1,000. 1,000 is the building depreciation. Building depreciation 1,000. Building depreciation 1,000. Building depreciation 1,000. And then 1,000 plus opening accumulated depreciation 5,000. 1,000 plus 5,000, total amount how much? 6,000. Total amount 6,000. Okay, right. Motor vehicle depreciation 4,400 into 20%. 880. Motor vehicle depreciation distribution expenses. Motor vehicle depreciation distribution expenses 880. 880. Motor vehicle depreciation distribution expense 880. And the insurance opening depreciation delivery vehicle 1,440. 1,440 plus 880. 880. Total accumulated depreciation 2,320. 2,320. Okay, total accumulated depreciation 2,320. Done. And then my office equipment, look at the office equipment, 2,750, 2,750 into 12%, 12%. 330. Office equipment depreciation admin expense. Office equipment depreciation administration expenses 330. 330. Then insurance, opening accumulated depreciation 540. 540 plus 330. Open account depreciation 540, 540 plus 330, total depreciation 870. Total depreciation 870. Okay, right. Tamai depreciation done. Depreciation done. Finished. Depreciation finished. Right. Look at the fourth adjustment. Look at the fourth one. Look at the fourth adjustment. Look at the fourth adjustment. Fourth one. Electricity bill of 355 for the month of March 2016 was not settled as at 31st March. Now, my electricity, accrued electricity. Accrued electricity, my 355 accrued electricity. 355 accrued electricity. Okay, accrued electricity 355. And then insurance, opening electricity paid amount how much? Up to now paid amount 3,800. Electricity up to now paid amount. Electricity up to now paid amount 3,800. 3,800 plus 355. Okay, Lamai, 3,800 plus 355. Total electricity expense is how much? $4,155. 4,155. Right. Look at the fifth one. The bank loan was obtained on 1st April 2015. Right? It should be payable in 2 equal installments. First installment with interest is due as at 31st March 2016 and it has been paid on 10th April 2016. Am I? Bank loan. Look at the bank loan. At first, we'll record bank loan interest. Alright, bank loan of the business organization, total amount how much bank loan? Bank loan 14% bank loan. Total bank loan 9,500. Bank loan interest is 14%. Bank loan interest is 14%. Okay. Students, total bank loan 9,500. 9,500 then for the current financial year, they have not paid interest. First installment with the interest is due 31st March 2016 and it has been paid on the 10th April. During the year, the business has not settled bank loan interest. Then how much bank loan interest for this amount? 9,500 into 9,500 into 14%. How much the bank loan interest? How much the bank loan interest? 9,500 into 14%. How much? 1,330. Yes, correct. Dakshani, correct. 1,330 relevant bank loan interest expense for the period. But they have not paid. But anyway, relevant bank loan interest expense for the period 1,330. Then relevant amount we need to record on the financial expenses. Under financial expenses, we will record this 1,330 financial expense. Okay, financial expense. Finance expense. So 1,330. And then students, this total 9,500, they need to settle in 2 installments. This total amount they need to test with in 2 equal installments. Then 9,500 into 2 4,750. One installment is 4,750. Other installment is 4,750. Now at this point, we have discussing company accounts. Okay, in company accounts also this type of questions is there. For the level 2023, we have discussed this point. Okay, and then in 23 A level, examiner tested this point. Okay, a point similar to this one discussed by the examiner. That is related to lease adjustment. Okay, right. Now then here, in next financial year, okay, for the current financial year, for our financial year, we need to pay 4,750 and okay, then here total 9,500 we need to settle in 2 installments. One installment is 4,750. Now the payable amount for our financial year, for the current financial year, you need to settle with interest. For the current financial year, payable bank loan 4,750 plus 1,330 interest. 4,750 plus 1,330 you need to pay for the current financial year. As at 31st March 2016, you need to pay this amount. 31st March 2016, you need to pay this amount. But unfortunately, business has not settled this amount, not paid. They have paid on 10th April. Within this financial year, we will settle. The business will settle this amount, but they have settled on 10th April. Okay, after 10 days of the year ending, business paid this amount. For the current year, they have not recorded. This amount. Then total payable installment how much? Yeah, payable installment is 4,750 plus 1,330. Payable installment is 6,080. Payable installment is 6,080. This 6,080 is a current liability. You need to settle this 6,080 as soon as possible. On that, they have paid this amount on 10th April. 10th April, the business has settled this 6,080. Current liability. Okay, that installment, including interest, current liability, 6,080. Now this 1,330 financial expense. Okay, right. Now quickly take out that one at first. 1,330 financial expense. Now go to financial expenses. In the financial expenses, write down. In financial expense, I write down here bank loan interest. $1,330. Yes, 1,330. Financial expense. And then that bank loan installment 6,080 current liability. 4,750 plus 1,330. 6,080 current liability. Bank loan installment. Current liability. Background installment current liability 6,080. Background installment 6,080 current liability. Okay, now background installment 6,000 current liability. Yeah, 6,000 current liability. Background installment. Clear? Is it clear? Dakshana clear? Abhishek clear? Malidu clear?
Yes, sir.
Yes.
Clear, sir.
Clear? 6,080 background installment lamai current liability. And then lamai okay this 6,080 we need to settle in this month. Then lamai balance amount. Balance 4,750. Balance amount. Lamai our financial year ending date is 31st March 2000. Our financial year ending date is 31st March 2016. On this date, we need to settle 6,080. On this date. But we were unable to pay this amount, therefore, this 6,080 current liability. And then insurance balance 4,750. You need to settle on 31st March 2017. On this date, you need to pay this amount. Balance 4,750. You need to settle on 31st March 2017. On this date, now you need to pay this amount. 4,750. The insurance, this 4,750 also within the current liability. That 4,750 also is within the current liability. Okay, after ending the financial year, within next 12 months, you need to settle this 4,750. That one also belongs to current liability. Current liability. Okay, that amount should be settled 31st March 2017. On that day, you need to settle that amount. Then that 4,750 belongs to next 12 months. Then that one also one of the current liability. Then this amount also you need to categorize under current liability. Current liability. Current liability. Okay. Current liability. Now I told the current liability. Here, I don't know here bank loan. Bank loan. Within bucket I don't current. Within bucket I don't current. How much the current liability? 4,750. 4,750. Is it clear? Dakshana clear?
Yes, sir.
Yes. Abhishek clear? Malidu?
Yes, sir.
Sidhu?
Clear, sir.
Clear? Right, right. Okay, Lamai, these adjustments we will discuss again with lease. Okay, with lease. We can discuss leasing under the chapter 12. Then we can discuss this point again. Okay, right, right. Lamai enough, right, right. Then go to next adjustment. Last adjustment. Insurance expense of 530. Insurance expense of 530 is relevant for the next financial year 1670. Then my total insurance paid amount how much? Total insurance paid amount 1,830. Out of this 1,830, 530 for the next financial year. Prepaid insurance. Prepaid insurance 530. Prepaid insurance 530. Prepaid insurance. Then my 530 categorized under current assets. Current assets. Prepaid insurance. Prepaid insurance. Insurance current assets samai 530, yeah. Current assets 530. People insurance, current assets 530. Okay, and then insurance. Insurance expense under administration expense insurance. Insurance here. Total insurance paid amount 1,830. 1,830 minus 530. Okay, 1,830 minus 530. 1,830 minus 530. Tell my closing balance is how much? 1,300. 1,300. Relevant insurance expense for the period. The relevant amount for the period. Finish. Done. Right, Ramai. Look at the trial balance. Complete trial balance information. Land and building, delivery vehicle, office equipment done. Accumulated depreciation also we have discussed, Ramai. Okay, we have done these points. Right. Land and building done. Accumulated depreciation, right, finish. And Ramai, look at the other information. Opening stock of the business. Opening stock. You can record opening stock. Record the opening stock. Opening stock of the business organization 3,850. 3,850 opening stock. Trade receivable done. Trade payable 7,600. Trade payable. Trade payable 7,600. Trade payable. And then provision for doubtful debts done. Allowance for expected loss done. Finish. That point finish, right? Purchases 15,000. Purchases 15,000. And then my sales 35,500. Sales 35,500 sales. Drawings 1,200 capital minus drawings. Salaries and wages 6,500 salary. My salary 6,500 salary. Insurance done. Electricity or sales commission distribution expenses. Sales commission. Sales commission distribution expenses 2,150. 2,150 distribution expense sales commission. And then 40% bank loan done. Cash in hand current assets. Cash in hand current assets 2,620. 2,620 cash in hand current assets. Bank overdraft 1,900. Bank overdraft. Bank OD. Bank OD. Bank overdraft 1,900. And then capital account balance 14,000. Capital account balance 14,000. Capital. Capital account balance 14,000. Capital account balance 14,000. Okay, right. Finish. Right. Now you can balance the question. Quickly balance the question. Right, Malindu, do you have any doubt? Malindu. Dakshari, do you have any doubt? Dakshari?
No, sir.
All right. Abhishek, is there any doubt? Abhishek.
No.
Sitma?
Clear, sir?
Clear, right. Cost of sales 50,400 cost of sales. Then gross profit The distribution expenses, administration expenses, the total expenses, 70,302. Yes. Now other income 0. So then net profit of the business organization 2,798 net profit of the business net profit. Then 2,798 transfer to capital. Now let me send you the answers to the WhatsApp. A PDF copy of the question sent you to the WhatsApp. Now let me quickly complete the question. Abhishek done.
Done.
Sitma, done right. Manadu, okay, finish Manadu. Malidu, finish, Malidu. Finish, right, right. Lamai, question number 39. Question number 39, you need to do today. Question number 39. Lamai, question number 39, you need to do today. Question number 39. Question number 39. Yes, 39. 39, right, Lamai. Question number 39. You need to complete today. We'll discuss tonight or Tuesday morning. Okay, I will allocate time to discuss tonight or Tuesday morning. Tomorrow whole day I have revision class is Wattala. Therefore, tomorrow I don't have time. Tonight or tonight means around after 9. Okay, after 9 tonight or Tuesday morning we'll discuss question number 39. Now it takes only half an hour to discuss 39. Okay, right there. 39. Complete question number 39. And now in the question number 39, look at the question. Look at the question. Look at the question. Question number 39. Look at this one. In this question, question number 39. Now, in the question number 39, the following additional information also provided. The closing stock as of 31st March valued at right down here as follows: cost 5,400, net realizable value 5,450. Please ignore net realizable value. Okay, tonight or Tuesday morning I will explain you net realizable value. No need to worry about that. If the cost is 5,400 and then here cost is 5,400, then if the selling price, net realizable value is selling price. Selling price is 5,450. No need to worry about. No need to worry about that. If the cost is 5,400, then selling price at the market 5,450. No need to worry about that. Therefore, don't worry about net realizable value. Okay, record only 5,400. In the cost of sale, you need to deduct 5,400 that as closing stock, and then in the statement of financial position also you need to show 5,400 as closing stock. I will we'll discuss 5,450. What is 5,450? We'll discuss. Okay, right. Come on, complete this question. Okay, if I have time tonight, we'll discuss after 9. After 9 or Tuesday morning. Sometimes maybe tomorrow night also. Maybe. Right. I will let you know. We'll discuss. Please complete this question. Try to balance this question somehow. That is my expectation. Well, try to balance somehow this question. Okay, right. Now, enough for the day. We'll try to discuss this question today or tomorrow night or Tuesday morning. Anyway, we'll discuss Tuesday morning. Right. Right now, have a nice day. Enough for the day. Please complete that question. Right. We'll stop the class now. Okay, right. Okay, right. Thank you. Okay, right.
Thank you.
Okay, right. Thank you, right.